Here's a view from Mr. KP Singh, chairman of India's largest real estate company, DLF, and he's of the view that in the near term, property prices have bottomed out.
Chairman of DLF. So firstly, a question on budget expectations. What do you expect out of the budget now?
My feeling is Finance Minister will provide incentives for growth because they realize that in India, eventually, it is through growth momentum that jobs can be created. So I think, in my view, he'll bring around this the incentive for growth in the country.
So specifically in terms of the real estate sector, what do you think will be your top two budget wish lists, sir?
Of course, it's not a budget item. The real estate issues are, frankly, not very much budget linked, but monetary policies. It is the interest rates are abnormally high. And secondly, access to the capital also is difficult. So therefore, both these things have to be corrected by the Reserve Bank, not by the Finance Ministry. And in any case, in my view, there should be more incentive to homeowners to buy homes at a considerably lower interest cost, payable over a considerably longer period. Both are not existing at the moment.
Sir, as far as the real estate sector is concerned, so do you now see some traction happening? Now do you see certain relatively easier liquidity situation? And also, what do you expect will be the pricing scenario going forward in the next 2-3 months?
No, there is no easing situation. The area remains very tight. I would say virtually starved of funds. I do not believe the prices will go down. One is called distress selling. That doesn't happen. That maybe some companies which are in trouble they will do, but that is not the yardstick of the industry. So the prices, in my view, will go up because the input costs have gone up, the interest costs have gone up. They have to be absorbed after all. So I can't see a situation where the costs are going to come down.
So lastly, a question on DLF. Do you see the net debt reduction happening anytime soon? And do you see the Amman Resorts transaction closing anytime soon, sir?
We are not in a hurry. You see, I have explained several times when I have been asked, a debt position in DLF is the most healthy thing we have, because you must understand the debt of a real estate company is the investment into land, which is called stock and trade. We are lucky we have got a great stock and trade. So the more we can sit on this stock and trade, the better it is, because eventually when the markets pick up, you always find the prices will outstrip the holding cost. So for us, this is not an issue, not at all. My feeling is that insofar as DLF is concerned, but same may not apply to other companies, incidentally. Other companies who are starved and who got highly debt and they have to honor it, their position may be different. So it will depend from company to company.
Okay. And so one last question on the fact that DLF missed guidance both in residential and commercial. Going forward, sir, where will be the focus? More on residential or commercial, or will it be on plotted developments versus flats? If you could give some clarity on that, sir.
Where we see more demand and where we can make more profits. Simple exercise. We will not invest somewhere where we don't make money.
Fair enough.
So it is a matter of market. Market forces will decide as well.
Okay. Thank you so much. That was Chairman of DLF, Mr. KP Singh.
Who expects property prices to increase, and he's of the view that they are in no hurry to sell any of their non-core assets. I'm not so sure if markets would take too kindly to that, because the cash flows for any of the real estate companies, they are not encouraging. In fact, they are appalling. If I look at quarterly numbers for DLF for the quarter gone by, profits were down, margins were down, revenue was also down. So they need to reduce their debt. May not agree with the chairman's statement that the debt situation currently is looking decent. But let me now bring on board